structure of SAUSD. Few minutes from now, the market is going to open, and it's important to know exactly what to expect on a daily time frame. So the market is mathematically engineered, and oftentimes when traders shout manipulations and use a whole lot of unnecessary grammars in the market, I don't fault it, but the most important thing is to address the direction of the market accurately. If trading is not mathematically engineered, why will a reaction here, a resistance structure here align with the current all-time high? So someone from the comment section to let me know why this happened. And this very price action, I also dictated it on a monthly time frame. What I'm doing now on daily, if you watch my video on monthly time frame, the analysis is the same. The calibration is the same, 100% accurate. So you see you have a reaction here. Here is a support structure on a daily time frame. And price pullback, create here resistance structure, giving us an ascending trend line, confirmation, resistance structure, and the current all-time high. And if you look down again, you will see that there is also another beautiful calibration, well calibrated, well scripted, 100% calibrated, mathematically engineered. Trading is mathematics. Liquidity is the vehicle that drives it. So let's make it simple for everyone. No matter your level of professionalism, tone down your grammars and use common terms. Here we have here as a support structure. I call it RT/SR. That's what it is, a retest candle from the structure. I've already checked it, where support become resistance. And price have returned here to create an ascending trend line. To show the mathematical calibration of trade, price return here. The reaction here, people say is liquidity, say is manipulation. No. This is not this is structure. The market has already been engineered for the reaction to come here. And that is why when the reaction came here, it didn't waste the entire day to reject completely. It didn't come back. The reaction came here. You see the reaction here, it happened on March, and it took till April for price to start thinking of coming down after price picking liquidity from here. And to put this into strong clarity, we have a double top structure. This is the retest of the neckline of double top structure. This is another retest, breakout of structure, and price came back there to give you double confluence on that very price action, on that beautiful price action. So you have seen what price did there. So this is how the market roll. Market has formed a double top structure here, DP. Let me put into perspective. Here we have here a double top structure. This is a double top structure. So this is the neckline, price retested it, and you've seen a drop there. And this is breakout of structure. This is followed by a retest 1, and this is final retest 2. And price return here to retest it. The break of that neckline, you can see it, retest 1, retest 2, retest 3, retest 4, and price is still on it. So if we don't find liquidity to move up, if we break out from here, that would be a strong bearish drop. If we break out from here, we're heading down. And to further guide us into what we're doing, we have a pending daily trend here. So look at that structure over there. Mathematical engineering, support structure 1, support structure to create a descending trend line, and price come here to confirm it. So given the descending trend line, a demand impetus, and you see price have returned there, the buying has been programmed to be on that descending trend line, but there is a game to it, and another reaction on Monday 29. So I expect a pullback into that structure, a pull into that structure around 3,822. Please, this is your next. So using the daily strategy, if you place your vertical line on that structure, where it cuts across is where you should expect today buy floor. Your buy position is 3,822. And when you take it to the left, 3,822. So I will technically, I see a strong support here on daily time frame. So let's align with 3,721. Price could dip, peak liquidity into the structure a little bit away from the descending trend line, and you get pull up. So what this means technically is on a lower time frame within this zone, you come to 15 minutes and look for buy structure. So we already have an insight. So you scale down. We have a strong support here on daily time frame. If you look left, there's a support here. There's a support at 3,721 into 3,781 into 3,800. So it extends up to the descending trend line. So we must factor liquidity. So on a lower time frame, you get a clear structure to that. And from the upper bound, price has created a descending trend line, rejecting on a daily time frame. Every touch on a daily, it's a rejection. So a technical breakout from that structure, and we have a daily close that will open a wave of buy, which will be contested here at the previous breakout junction. You can see here, we had a breakout from that structure. We had a breakout from here. The reason this candle didn't challenge the ascending trendline breakout was because we had a strong daily rejection at this level. That is the reason. So a broken demand floor became a supply roof on daily TF. You see the reason this candle that peak liquidity didn't approach. The intention was to retest a breakout from an ascending trend line, but there is a broken demand floor here. A break of that demand floor on daily became a supply roof for bearish drop. Price could still come back to retest here as a potential sell zone and will drop again. It's valid. A push into this zone is a sell. So if price push into that, so look at the structure. This is an ascending trend line, RTSR1, RTSR2, a strong liquidity rejection, the same RTSR. Price came back, respected it. We have 5 reactions on this ascending trend line. 1, 2, 3. So all these are market story. And we come back here. We reacted here again before a breakout. We missed that retest due to daily rejection. So, and if you look at the structure very well, let me zoom in for you to see. Long confirmation is not yet. So this is what's going to happen. You can see the market is almost open, and you see that the market is going down. It's going down. So I think my buy is going to be somewhere around 3,822 on this descending trend line. But the insight has been spelt that you will look for buy opportunity. Of course, I'm looking on the daily, on intraday, I'm seeing a retest position at 3,991. So if price pulls into 3,991, that's about 10-point drop. We could see some daily pickup in liquidity that will help so that we can move up. On daily, I'm looking at 74 for potential sell opportunity. So if price rallies into 74, into 74.70, you are looking to sell, and you are looking to buy from 3,830. Anything at this level, you are looking at a buyback. But at the moment, let us see if we can pick intraday liquidity, then move up to challenge daily rejection, possibly at New York session 3,000. At 77 level. So at 77 level, I see market reacting, aligning with the descending trend line. And if we break out from this structure, that will ultimately bring us to where I hope to buy as a part of my daily rejection strategy. So this is what the market is all about, and this is what I see here. This is what I see technically. So if we break out from here, price will likely come back to retest it. A breakout from this descending trend line will call for a retest, and if that happens, then that will set up an upward movement in the price. So this is what we see, and feels good to see that the market is pulling back. Let's see if we can pull back by 10 points. And I will shortly look at the price on a lower time frame, 15 minutes, 30 minutes, so that we can catch that rejection properly. But from what I see here, SAE-USD is looking at, of course, the monthly price action also gives us that if you check the structure we sent earlier before, now price is sitting on a monthly support, but that's a monthly candle, so we could have, a considerable pullback, and towards the end of the month, we could have a rejection pending the outcome of the FOMC. Pending the outcome of the FOMC. If the outcome of the FOMC favors the United States dollar, we are going to see that that monthly structure will be broken. Then prepare us for a deeper correction. That will be a breakout of that monthly structure, followed by a retest and a bearish continuation to a point where the real support for gold is around 3,400. The real support, if you really want to see rally in gold, if you check the monthly chart, it's around 3,400, 3,450, 3,500 based on the monthly chart. So this is if you have a divergent view, please come to the comment section. You're welcome.